What's up guys, and welcome to the CryptoApex channel. My name is Noel, and today we will be exploring the world of cryptocurrency. By the end of this video, it is my hope to explain what Bitcoin is and what its relationship to the traditional money systems as we know it today. My hope is that this video will help you to gain a better understanding of Bitcoin and blockchain's value long term and why it is important. First, let's discuss exactly what money is. There are several different ways to define money, and we rarely learn in school what is the history, characteristics, functions, and how to manage money. This is interesting since money is something that we use in our everyday lives. Money plays several important roles in the economy. Money makes trading easier and more efficient. Money is a way in which we communicate value to one another. The characteristics of money include durability, divisibility, uniformity, portability, acceptability, and a limited supply. Durability means that money must be able to withstand the test of time and normal wear and tear. Divisibility means that large denominations can be broken into smaller ones. An example is how a $10 bill can be exchanged for two $5 bills. Portability is very important for money. It must be able to be easily carried and transported. Most economies today use paper cash, credit cards, online payment systems such as PayPal, Google or Android Pay, Apple Pay, QuickPay, Zelle, and a plethora of other online banking applications in order to increase the portability of money. Uniformity. All of it must look alike and be uniformed in nature. One bill or unit has no more or less value than any other. Acceptability means that it must be able to be accepted by merchants in exchange for goods or services. Acceptability means that it must be recognized as a satisfactory payment for any debts, public charges, taxes, and dues. In order for money to maintain its value, money must have a limited supply. Money must act as a unit of account, a medium of exchange, a store of value, and it must be counterfeit resistant. Being a medium of exchange means that it is generally accepted as a form of payment. A unit of account is keeping track of the value transacted. A store of value means that the value of the money must remain stable over time. Let's talk about a few different types of money. Commodity money is gold, platinum, silver, and copper, which are precious metals that have intrinsic value. Commodity-based money is the US dollar while it was still on the gold standard. This is a time when dollars were backed by a tangible asset such as gold. Fiat currencies. Fiat currency is debt-based money backed by the faith that one has in the government or the treasury of the government which issues it. It does not have intrinsic value or use value. Cryptocurrencies are mathematically based, programmable, smart money. It is money 2.0. In this chart, we will be looking at the traits of currencies. Here we're going to compare gold, fiat currencies, and cryptocurrencies. As you can see, in each category, cryptocurrencies score higher than gold or fiat currencies. For this reason, it is a more sound form of money. Bitcoin is a decentralized, distributed, peer-to-peer mesh network and a database which acts as a digital cash system as well as a store of value. The blockchain stores records of value and transactions. There is no central bank constantly issuing Bitcoin or controlling its monetary policy, as these items are already pre-established by the Bitcoin software code originally written by the anonymous creator of Bitcoin and the blockchain, Satoshi Nakamoto, in 2008. In a fully decentralized monetary system, there is no central authority that regulates the monetary base or issues the currency. Instead, currency is created by the nodes of a peer-to-peer network. The algorithm defines in advance how currency will be created and at what rate. Today, a majority of all transactions require a trusted third party as an intermediary between the merchant and the seller, with the exception of cash payments. Internet commerce currently completely relies on financial institutions serving as trusted third parties to process electronic payments. Some examples of the trusted third parties which reside between the merchant and the seller are any type of credit or debit cards or any type of financial institution which help facilitate the transactions. Blockchain technology removes the need for a trusted third party to act as an intermediary between the buyer and the seller, therefore allowing the merchant and the consumer to directly transact with one another using a trustless protocol. Bitcoin is blockchain based. Blockchain is the underlying technology which powers the Bitcoin network. Bitcoin is primarily used for payments. Blockchain-based systems have a wide array of uses to transfer almost anything of value. Blockchains have a wide use case scenario besides just being currency. Currency is simply the first application of this new invention. It is the concept of decentralized value transfer. Bitcoin is designed to act as a medium of exchange which does not require the involvement of trusted third parties or intermediaries. Without the use of trusted third parties to verify transactions, merchants and sellers can directly transact with one another. Transactions are verified by network nodes through cryptography and then recorded in a public distributed ledger called a blockchain. Units and divisibility. The unit of account of the Bitcoin network is called a Bitcoin. Bitcoin, spelled with a big B, refers to the Bitcoin network as a whole. Bitcoin, spelled with a small b, refers to the unit of currency. Each Bitcoin is basically a computer file which is stored in a digital wallet app on a smartphone or a computer. People can send Bitcoins or a fraction of one to your digital wallet, and you can send Bitcoins to other people. Every single transaction is recorded in a public list called the blockchain. The ticker symbols used to represent Bitcoin are BTC and XBT. A Bitcoin can be broken down into 8 decimal places. The smallest unit was named after Bitcoin's anonymous creator, Satoshi Nakamoto. The smallest unit is 0.00000001 Bitcoins, which represents a Satoshi. Satoshis are also commonly referred to as sats. 100 million Satoshis is equivalent to 1 Bitcoin. This is a chart which shows you the units of measure. 1 Satoshi is 7 zeros and then a 1. 10 Satoshis is 6 zeros and then a 1. 100 Satoshis, 5 0 and a 1, onward and so forth until you get to 100 million Satoshis, which is the equivalent of 1 Bitcoin. This is a chart that explains millibitcoins, also referred to as MBTC. A millibitcoin is 1/1000th of a Bitcoin. 1 millibitcoin is equal to 100,000 Satoshis. There is also another term called a microbitcoin, which is equivalent to 100 Satoshis. Transactions are processed in the network through a process called proof of work. Proof of work is a consensus mechanism, which is a protocol that Bitcoin uses in order to achieve consensus within the network, in order for the transactions to be processed. Once the transactions have completed processing and are confirmed as being valid, they are then added to the blockchain. The next block to be processed in the chain is linked to the last block. This is what creates the chain in blockchain. Each block in the blockchain contains a hash function identifying the block that preceded it. The chain of blocks cannot be broken, and the integrity of the chain can be verified by checking that all the hashes line up in sequence. Blockchains are transparent and auditable. The invention of the blockchain is bigger than the creation of Bitcoin. Bitcoin is simply the first use case of the blockchain, the transference of cryptocurrency. Through the blockchain's innovative new technology, we can now facilitate not only the movement of cryptocurrency, but also of goods, assets, and titles of ownership, just to name a few. A blockchain is a distributed ledger. Let us imagine that everyone in the world has an Excel spreadsheet open on their computer. When a transaction occurs within the Bitcoin network, it broadcasts to everyone's spreadsheet simultaneously. Distributed means that the blockchain is synchronized across multiple locations on a network instead of being maintained and controlled by one central authority or location. Each block in the blockchain contains transactional information shared over the network with all participants. Distributed ledgers can be one of two types, open or permissioned. An open ledger means that it is public and it is accessible to everyone over the network. A permissioned ledger is more centralized and it is generally controlled by the creator. The maker of a permissioned ledger controls and identifies the roles of the participants, enables the participants to be a part of the network, and provides participants with the encrypted keys necessary to validate blocks. Blockchain technology will radically and drastically change the world as we know it. It has the potential to disrupt every industry on the planet. Allow me to give two examples of how this new revolutionary technology will change things. My two examples today will be in relation to record keeping and to voting. With record keeping, blockchain is a superior form of record keeping, with better reliability and authenticity than the traditional record keeping systems we use today. The potential impact of blockchain technology for use in record keeping is astronomical. The advantages of blockchain in record keeping is cost savings, efficiency, security, flexibility, and a competitive advantage. The advantages of using blockchain technology in record keeping are as follows. Cost saving is the most obvious benefit. Blockchain transactions do not require intermediaries, and the processes can be made more efficient and less expensive. There's really no need for auditors or legal professionals to validate the authenticity of the information, so those costs come out of the process. Efficiency. Fewer people means a quicker turnaround time. Transactions that might take days waiting for multiple sign-offs can be concluded in just seconds. Security. The fewer participants there are in a transaction, there's less risk that there's something that could go wrong. Handoff points are a prime vulnerability, and blockchain effectively eliminates them. Flexibility. Any digital asset can use blockchain, including difficult-to-protect items like multimedia and email records. Competitive advantage. Companies in the intellectual property space, such as law firms and stock photo agencies, can consider using blockchain to offer new services that benefit both buyers and content creators. 1. In voting and polling, blockchain has a lot to offer the voters by allowing transparency for them. It can also reduce the risk of voter fraud and be transparent with the election's results. The blockchain is paving the way for a direct democracy. The advantages to blockchain voting include security, anonymity, reduced processing time, and transparency. A few of the many industries that blockchain will improve, enhance, and eventually transform are supply chain management, financial services, healthcare, real estate, digital identity management, government, Internet of Things, cloud computing, and this is only scratching the surface of what this amazing and revolutionary technology is capable of. I want to take a moment and talk about the Enron scandal. The corporate fraud of Enron is referring to when the top executives at the company fooled U.S. regulators with fake holdings and off-the-book accounting practices. The price of Enron shares drastically dropped from its peak from about $90 to 26 cents at the time of its bankruptcy in October of 2001. Today, it is still one of the world's largest scams, which defrauded the public for over $60 billion. The scandal itself could never have taken place if the company's accounting and record keeping was based on the blockchain, which is transparent and visible to everyone viewing the company's accounting blockchain. All of the viewers would have been able to see exactly how much money was being transferred and to where. This is a major improvement in transparency in the way that we do business today. This is just one example of how blockchain technology will have major impacts in the near future and change the way we do business altogether. I also want to take a moment and speak about the quantitative theory of money, which was created by Nicholas Copernicus in 1517. The theory states that the general price levels of goods and services is directly proportional to the amount of money in circulation, or the money supply. There are only 21 million Bitcoin which will ever exist. 3 to 4 million coins are already estimated to be lost forever and unrecoverable. This leaves only 17 to 18 million coins left which can be owned. This short supply will in turn drive up the price over time as more mainstream adoption occurs and institutional and retail investors start buying more and more Bitcoins. A limited supply plus an increase in consumer demand equals higher prices. Now let's look at inflation versus deflation. What is inflation? Inflation is a rise in prices for goods resulting from a continuing drop of purchasing power over a period of time. Now, what is deflation? Deflation is a decrease in the price level of goods and services, which only begins after the inflation rate drops below zero. Fiat currencies themselves are inflationary in nature. As time progresses, we will need more and more money to buy everyday goods and services. Let's take a look at America in the 1950s. At this time in history, we can see that goods and products were significantly cheaper. The average price for a gallon of gas in the 50s was about 18 cents. The average cost of a new car was about $1,500. By the end of the decade, it had risen roughly 45% to the cost of $2,200 in only 10 years' time. The estimated average price for a new vehicle in February 2020 in the United States is over $37,000. In the early 1970s, President Nixon officially took the United States off of the gold standard. At that time, the paper money became fiat currency, which means that it contains no intrinsic value and there is no tangible asset which backs it. Through the study of history, we now understand that the average life expectancy for a fiat currency is roughly about 20 to 30 years. They will all eventually fail and collapse. Simply, they do not work. Since the time that money has officially become fiat currencies, governments quickly realized that they had limited power and it lied within their central banks. The ability to print money at will is a process referred to as quantitative easing. The problem with quantitative easing is that who decides when is enough enough, and where is the debt ceiling? A better question might be, what happens when we get there? Several countries around the world have suffered from hyperinflation throughout the years. Some of the more recent examples are of Zimbabwe in 2017 and Venezuela just recently, which has suffered immense hyperinflation of almost 50,000%. Venezuelans are literally throwing their cash into the streets as it has become practically useless. Just because fiat currencies are something that we are used to does not necessarily mean that they will be around forever. Having a contingency plan is important. Diversifying into different asset classes such as precious metals, real estate, and cryptocurrency is more important than ever to hedge against inflation, as a contingency plan is paramount. As the saying goes, hope for the best, but plan for the worst. As the supply of Bitcoin continues to drop, its price and value will climb. The increased valuation of Bitcoin will naturally change and evolve with our economy. Bitcoin is quickly becoming the quasi-gold standard for the cryptocurrency market by allowing people and businesses to move credits from one online marketplace to another or from one cryptocurrency to another. I think that soon we will be dealing with micro Bitcoins in the near future as alternate currencies such as Bitcoin become the new digital gold standard. That's all we have for today, folks. I hope this video has helped you gain a little bit more understanding of Bitcoin and blockchains. We thank you for stopping at the Crypto Apex channel, and make sure to comment, like, subscribe, and turn on notifications, as it truly does help out the channel a lot. Until we meet again, onward and upwards, and I'll meet you at the Apex. Stay safe, and goodbye for now.